So, hi, my name is Ryan Walker. I'm the Senior Mining Analyst at Echelon Capital Markets, back with another installment of our mining Q&A series. Today, we're joined by Mark Selby, CEO of Canada Nickel, which is advancing the very large Crawford Nickel-Cobalt Sulphide Project in prolific Timmins mining camp of Ontario. Mark, thanks for joining us today.
Yeah, no, thanks for the opportunity.
Okay, just for those who might not be familiar with the story, can you maybe just give us a very quick thumbnail sketch of the project location, stage, any resources, infrastructure you have?
Yeah, sure. So this is a brand new nickel sulfide discovery, which is a pretty rare commodity. Was discovered in late 18. We acquired it after 4 holes had been done. I had seen the potential for it to be another very large-scale Dumont project, which I advanced in my past life. What we have is already one of the 10 largest nickel sulfide discoveries in the world today, resources in the world today. We're sitting just outside Timmins, literally, adjacent to a highway with all the infrastructure in place. Timmins, as you highlighted, is a great location, to build a project. We've got very good support from the local First Nations communities, good support from the local community, and again, we're in a great position to, be able to take this project right through into permitting and construction. We're going to have a PEA done by the end of March, and we're looking to have a feasibility study done by the end of this year. So, we're advancing it very, very quickly, and again, we've been very happy with the stream results that have been coming out of the project.
Okay, great. And so you mentioned the Dumont project, and again, for people that maybe are unfamiliar with yourself, can you just give us a brief history of your own background in nickel and maybe your outlook for the metal going forward?
Sure. Yeah, no, that's great. So I've been in and around nickel most of my 20 years in the mining business. I've worked outside mining in private equity and management consulting for a decade prior to that. But I was head of commodity research in Inco starting in 2001. I took over as head of strategy there in 2005 before we tried to merge with Falconbridge to try and create a great Canadian base metal company, which unfortunately didn't come to pass. I left, was clear, Vale was going to be running things from Brazil. Worked with Quadra Mining for a few years with a great team there. Ultimately, Quadra got acquired by KGHM, and in 2010 I joined what was Royal Nickel at the time is now Karora, but it was founded around the Dumont nickel project. We took that from resource to fully permitted, construction ready project. Again, the unfortunate part was the nickel market wasn't ready for a new nickel project at that time. What's flipped 180 degrees, and I think, again, for investors to feel confident about, okay, what's different this time? BHP Billiton spent most of the 2010s trying unsuccessfully to sell their nickel business. And now, for the past 18 months, every investor call, BHP makes it very clear, their focus is on future-facing metals, and what they define as future-facing metals are nickel, copper, and potash. And those are their three key focus areas. Again, they're already put their money where their mouth is. So they about 3 years ago, the sort of grandparent of the kind of deposit that we want to advance was first built by a predecessor company that BHP acquired in 1995 called Mount Keith. They put the Yakabindi project, which is just along strike from Mount Keith, to bring that into production to continue to produce from there. And then just this past spring, they acquired the Honeymoon Well project, which is in the same region as their project from Norilsk for unfortunately an undisclosed sum of money. So they've already started to acquire some of these large low-grade nickel projects. So if BHP is thinking that way, that all of the other major companies are thinking that way, and fundamentally the opportunity is, nickel has been a metal that's been underinvested outside. Indonesia has been the bulk of the growth for the last 5 years. The rest of the world, nickel growth has been, very, very underinvested, and supply has actually been decreasing outside of Indonesia during that time frame. And so, we're now at a point where the EV market, and again, I know cobalt has had attention and lithium from time to time, but the bottom line is the biggest metal by weight in an EV battery, Tesla's most important metal in their battery, is nickel. And so, that's why Elon Musk got his Battery Day presentation, talked a lot about nickel, and conference call, said, miners, please make more nickel, because, if you look at most industry analyst forecasts, they are looking for, about 1.5 million tons just from EVs on a 2.5 million ton market. The other main use for nickel is in stainless steel and other alloys, and that's continuing to grow at 4 or 5% a year. So, when you add them up, we need to double supply by 2030, versus where we were, a year or two ago. And the reality is because of that huge spike in nickel prices, those of you who are mining investors back in the mid 2000s, that basically cleaned out the cupboard of projects that have been sitting around for a while. So, there's very few large scale nickel projects that are going to be able to deliver the type of nickel that the Teslas of the world are going to need, and sort of the hidden message in the Tesla Battery Day. And he talked about it more on his call last night on the Tesla quarterly call. He confirmed, that he tweeted around 20 million cars, and 20 million cars, even if you assume a chunk of those are lithium iron phosphate, are going to need 1 million to 1.5 million tons of nickel just for Tesla. So, right. That's the, Voisey's Bay was the last 1 million ton big sulfide discovery that we've had. As big a resource as that is, that's going to be, 3 years worth of Tesla's nickel consumption by 2030. And what we've discovered to date, has that much, contained nickel in it. So, we need to find many, many, many more nickel sulfide projects.
Right, because you've got every other major car manufacturer saying they're transitioning at least partially to electric, if not fully electric, within the next several years.
Oh, GM, again, if you sort of think of, the sort of the big slow moving dinosaur of the auto space, I think they just announced today that they're going to phase out production of internal combustion engines entirely by 2035. Yeah. That's 14 years from now.
Exactly. It's not that far away though.
In a mining lifetime, that's two project development cycles, right, at top speed. So, yeah.
Okay. Well, that was great. Thank you for that. Summed it up very nicely. So from here, really, it's kind of hard to decide where to go. You guys have had such nice positive news flow. You have substantial exploration success recently. Positive metallurgical updates, important MOUs with First Nations, and I guess importantly recently with Glencore, nearby producer.
Yeah,
I know it's hard to kind of briefly walk through those, but maybe if we start with Glencore, because that seems seems like a pretty significant deal there.
Oh yeah, no, there was a massive opportunity for us. The thing with these projects, they're low grade, so you have to build the projects at a certain scale. So, Dumont is if that feasibility study is $1 billion US capex. We think we're going to be able to get started for slightly smaller than that and lower capex because we've got bigger, higher grade core than Dumont does. But what this Kid Creek opportunity does, because we can utilize some of the capacity they're not using in their existing mill, is we can get started at a much smaller scale, a much, much, much lower capital cost, and get into production a year or two earlier. It'll be at a small scale, but what that will allow is us to completely, at a commercial scale, prove the economics and prove our flow sheets and so forth, and completely de-risk it so that, we can go to the great big, our deposit is so large that, the larger you build the mill, the better the economics. So, with that potential to start small, it gives us a potential to get, very large, very quickly at a much lower risk, for investors. The other big, synergy between the two projects, Glencore has been mining at Kid Creek for 50 years, and there's 50 years of tailings there. So our tailings are slightly basic, where they have acidic tailings that are typical of sulfide projects. So, our tailings might be helpful for them. And then they have a very large footprint where they had a copper smelter, copper refinery, and a zinc refinery that they tore down back in 2010. But literally, the concrete pad is there and all of the utility hookups, and we're looking at doing downstream processing, in our area. We still have to, work through all of those things, with Glencore, but, again, there's real value for both of us, and I'm, pretty confident that we're going to be able to get to, an agreement that makes sense for both parties, and again, transforms how we can take our project forward. The other key piece, and part of the reason we wanted downstream processing is, last summer we talked about being able to produce net zero carbon nickel, cobalt, and net zero carbon iron. our tailings, the mineral that makes up 90% of what we mine, spontaneously absorbs CO2 when it's exposed to air. So we can use our tailings, the hydroelectric power in the region, and being able to build processing plants nearby to actually deliver some zero carbon production. And that their Met site is the perfect location for us, to do that. So yeah, no, I'm very, very happy that they're choosing to spend time with us at this point in time.
Right. So, I mean, your metal mix, are the components for the EV revolution, and then you're doing it at net zero carbon footprint. So that's fantastic. That's exactly what people are looking for. This whole ESG theme that's sweeping investing right now. So
yeah. Oh no, for sure. Yeah. No. And the fact that you don't have to do anything to the rock except expose it to air, and the fact that we're going to grind it up very finely to be able to pull out the minerals that we want is just going to help that process along.
Right. So I guess it's kind of sticking with the ESG theme,
Yeah.
a handful of MOUs with local First Nations. I mean, if you don't have the social license, you might as well just forget it. Doesn't matter how great the project is if you don't have the social license to do it.
Oh, that's an excellent point. I mean, that's one thing that investors, in my opinion, don't pay enough attention to. There really are a very limited number of places in the world that allow you to build mining projects, very efficiently and effectively. With Dumont, in my past life, one of the things I'm most proud of is we had widespread community support all the way through that process. We signed the very first impact benefits agreement with an Algonquin First Nations in Quebec. There's lots with the Cree First Nation and some other First Nations, but this was with the first Algonquin. So we've taken that same approach, to our work at Crawford and started from day one, with a very open, shared benefit approach to everything. And so, it's great. Again, both First Nations in the area are, comfortable with heavy industry. So, we signed with Matagami and Matachewan First Nations, who are part of the Waban Tribal Council. And then we also signed with Tequatagmu Nation. So, again, I would encourage people to look at the comments from the chiefs. Not only, it was, they like our team, they like our approach, and they like the project. And in terms of being able to get this thing permitted, as quickly as the law allows, and doing all the right things you need to do. But basically having that full political support behind it, is tremendous. So, and Tequatagmu Nation, wants to go beyond a typical, what we're looking at today. I had a meeting this morning, is they'll use their capital to actually build part of our site infrastructure in terms of electrical distribution. And so, that's a business they want to turn into a much broader business across the region. And so, for us to be able to do that, it makes sense for them, makes sense for us. It's a great, it's a great opportunity, and it's great to be working, with groups that are, again, thinking about, how we maximize value for everybody.
Yeah. Well, I mean, kudos, because I mean, I've been covering junior mining sector for 15 years plus, and I don't think I've ever seen such a good setup with First Nations and early on. So well done on that front, and very important consideration. So great job on that. So you mentioned earlier the PEA. Maybe if you could kind of just take us through what the news flow expectations are for the balance of the year. PEA in the near term, I guess, is the big one.
Yeah. So we've got the PEA coming at the end of the first quarter, with the feasibility study coming at the end of the year. Those are kind of two of the major milestones. But in terms of news flow, we've seen since December, we've started stepping out to some of the other targets just within the Crawford area itself, and had some good success on the West Zone, extending the higher grade core, and then as well our North Zone discovery. So the good thing with that is it's really, help us prove up our geophysical model of where we think the best nickel mineralization is. And so last year, right after we went public, we announced we had acquired 5 other option properties from Noble Mineral Exploration. So we flew the geophysics on it this fall. We're just getting the interpretations all back now. And again, it looks like there's some very, very good targets that we'll be drilling this coming winter. And so, there's the potential, we're hoping by the end of this that we have at least, 2 or 3 Crawfords, in amongst the overall land package. That's not unique. If you go to Western Australia and, the Mount Keith, Honeymoon Well, Yakabindi that I just talked about, those are all within about 25 miles of each other. So, and in northern Manitoba, Valley has smaller deposits, not the same scale as ours, but the same type. And again, there's a cluster of them, along some very major structures. So, what we're hoping here is that, we're in the early days of defining a whole new nickel district. And some of the geophysics look pretty good. So fingers crossed on that front.
Right. I mean, you've already got 1.3 billion tons, and mine life probably measured in decades rather than years, and that's what the big guys want, right? They want to get in there, invest their capital, and be there and own the place for 30-40 years. So that's great.
Yeah, and that's one of the key things. Again, a lot of junior companies, they just drill and drill until there's nothing left to drill. We drilled off enough that we knew we already had a few decades worth of ore, and so it's important for us to put some economics around that first sort of chunk of ore that we've got. But by the time we're done, we've already got a bunch of other targets that aren't going to be part of that PA. And by the time we get to the feasibility study, resource cutoff, later this summer, it's going to be a substantially larger resource. But we at least can give investors a good idea what the economics are going to look like. And then any and all resource after that is just going to make the numbers look that much better. So right. It's really good. And then the other part is the metallurgical work you mentioned earlier. We're very, very happy with the results to date, but we're just, kind of 7 months into this. And a lot of the other deposits like this, have spent years, if not decades, trying to get the metallurgy exactly right. We're absolutely where we want to be, maybe a little bit better, but we still have some more tweaks to go. So, we'll have news flow on the metallurgy front. And then, again, conceptually, we believe we can produce net zero carbon, nickel, cobalt, and iron. We're doing the lab work now to be able to demonstrate that, and then we'll be ramping that up as well as we go through the year. So there'll be lots of news flows, lots of news flow on lots of fronts during the coming 10 months. So.
All right. Well, I mean, the start to the year you've had, nothing, hard to keep that mojo going, but it looks like you're well on your way to do that. That's good. That's great. I think that's a nice summary of the project, and would encourage investors to do some more work and dig deeper on this one. It's been a fantastic story in the relatively short time I've been covering it. It's been a pleasure to cover. I'm glad your dog didn't get my dog barking in the background, and greatly appreciate you taking the time to do this with us today.
No, anytime, and hopefully we'll be able to talk again later this year with lots more good news in between.
And live and in person one day.
Yes, that would be very nice.
All right, thank you.